Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into the world of media and technology with Trump Media and Technology Group. And let me tell you, the numbers are juicier than a Trump steak, but maybe not as filling. And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss it more. We're checking out their most recent 10Q form, basically a quarterly checkup for investors dated March 31, 2025. This is a look under the hood to see how the company is doing financially. It covers the first 3 months of the year. Trump Media and Technology Group, or TMTG, wants to give people their voices back. They do it by running Truth Social, which they call a safe space for free speech. They are also focusing on Truth Plus, a streaming platform with news and Christian content, and Truthfire, looking to include fintech investment vehicles. Let's get right to the financials. First stop, the balance sheets. These are like snapshots of what the company owns and owes. Looking at cash and cash equivalents, it seems like they have around $146 million, which sounds like a lot, but it's actually down from the end of last year when they had $170 million, so less cash on hand. However, their short-term investments are pretty solid, $612 million, and change almost the same as they had at the end of the previous year. Overall, their total assets are a little bit lower. This year they stand at $918 million compared to $938 million at the end of the prior year. Digging into the other side of the balance sheet, liabilities, what the company owes, are pretty low at almost 27 million tavers. So from just a glance at the balance sheet, the company seems to be in fair shape. Let's see what's happening with their actual performance. Now, the good part, let's scroll down to the statements of operations, or the income statement. It shows how much money the company made and spent. Their net sales or revenue, it's only $821,000. It is up a bit from $770,000, but it is not that huge for all the effort they put in. It appears they haven't figured out how to make money on the platform. Let's scroll down to expenses. This is very important. Their research and development cost $12 million. Ouch. General and administration costs of about $25 million. You can see that as of right now, expenses really do outweigh the revenue, as in general, any company should hope to make more money than they spend. Their net loss, meaning the money they are actually losing, is around $31 million for the quarter. That is better than last year when they lost $327 million of cash. This translates to a loss per share of $0.14. While the loss per share is alarming, this isn't that alarming because this is still a relatively young company. They are still trying to gain traction. But let's see what are some of the core issues that may be contributing to that. Now for the statement of cash flows, which can tell us how the company is managing its money. Cash is king, as they say. Starting at the top, they had that net loss of around $31 million, as we just stated. Depreciation and amortization, which is non-cash expenses, were $1.7 million. Stock-based compensation, which is also non-cash, added another $17 million. This means they are paying employees with company stock, which doesn't affect their cash right now. But it does dilute the value of the stock for current investors. Overall, they used almost $10 million in operating activities, meaning the actual core business is spending more than making. Then we can see cash flows for financing activities is highly impacted by repurchasing their own common stock. So even though they're not making a ton of money, they're still trying to boost their numbers with these actions. Now, the good stuff, let's see what else we can learn from the notes to the financial statements. These explain the numbers in more detail. Here they describe what business they are in Toronto, but what is key here is that they mention reverse recapitalization. This is important because it impacts how their financials are presented and what it means for investors. Let's skip to some accounting policies and just note down that the figures are estimates, but based on what they deem is the best available, which is something that every company states. Here is something interesting and important. So they mentioned that one customer accounted for 93% of their revenue. This is a massive concentration risk. If they lose that one customer, their revenue would plummet, which means you would lose almost every single customer or a client you worked very hard for. Here they disclose any deals with insiders, which always raises a flag for potential conflicts of interest. Here they describe an admin services arrangement with a company related to one of the executives for a small fee per month. Let's quickly check for defaults upon senior securities. There is nothing here, so we can assume it has no debt problems. Let's check the part that is about unregistered sales of equity, or what regular folks call secret stock sales. It states none here. Okay, last stop, legal issues. Basically, what are they being sued for and what is the potential damage? Are a few lawsuits that they are part of? It seems like most of these cases involve fighting among various parties on the board and trying to lay claim to various stock ownerships. These legal entanglements cost money, distract management, and create uncertainty, so it's good to be aware of these events. So let's wrap things up. The big picture for Trump Media is a company with declining cash reserves, but a very valuable stock. Its operations are not profitable, yet the company maintains plans for growth by continuing to launch initiatives such as TruthFi. One of the risks is in relation to a recent merger, specifically mentioning reverse recapitalization. This makes for some accounting funniness which can lead to confusing their figures. Another interesting point is the pre-combination equity holders of private TNTG hold the majority of voting rights. In simple English, what that means is people that owned the business is run, the shareholders' vote does not really matter. Overall, this company has a great idea, but so far the operation is not working as well. They need to figure out how to make more money without spending so much. At the moment, the value of the stock is more or less based on the name itself, but for the company to actually grow and for you, the investor, to make money, the fundamentals and metrics need to improve. There is a lot of uncertainty in this business. Make sure you know what you are getting into if you ever decide to invest. Alright, that's our breakdown of TMTG's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.